Weird. Weird. I don't even need to look at the charts to know Mikey was involved in a short here, do I? So, yeah, I surprise myself sometimes. Did anybody grab that today before we get into the market review? Looking for this high to get swept, which comes back down to the origin. You got another beautiful sweep in there. We'll go over all of this, and then we'll do a little bit of multi-time frame analysis, which might have helped keep you on the right side of today. In fact, it looks like there was, quite honestly, there was a lot of premium content that showed itself today, right? This was a textbook long right there. And we had enough volatility that if you were involved in the right spots, you probably made a lot of money today. Probably a lot of money today. I had a really good day as well on both, which I felt was coming. And that's one of the things I also want to speak about, is just that you have days where you have difficulty, and that's actually meant to grow. You're meant to grow using those days until you learn the lessons from them. Right? So let's get into today a little bit. Everybody's a little exhausted from all the fun stuff today. So let's get rid of all this. So when you're coming into this morning, let's go here, and you're looking at the PA, you got a few different things going on. You've got this horrific. You got this high. Failed here. Trades back down, liquidates the SNDR. You get a lethargic move leading to rejection. Right? If there's one thing I can teach you guys, it's when to identify when you're looking to trade higher or lower. And then how to get involved is something else entirely, right? So you have this movement down, violently pushes up, right? So we noticed yesterday this pattern, and this is an important pattern, right? Because it's how price actually moves. And these are areas you can retest to. So you get your SNDR right underneath it. This breaks this, you are long for the day, right? Until you have something of an objective taken. Now, this ended up providing a strong move, but this move burned it into your brains, because this is a finalization of your trend until an objective is done. Let's go back to the 15-minute. So even with this low being not exactly what you're interested in, you end up getting this candle, which really shows that the bottom's in for at least the interim, right? Without taking the liquidity there. So this is what I was kind of talking about this morning, where we can be predictive, yes. Proactive, yes. But your best skill is to react based off of what the market's telling you, and then studying the important clues that the market's whispering to you on a daily basis. And if you can do that, that's when you start really having the magic happen, with multi-time frame analysis being paired with it, right? So for example, the ICT bros that were shorting the hell out of this, looking for this liquidity got wrecked because they didn't understand market structure. Okay, so this takes this. We have a lethargic movement up, which then leads to strong movement down. And then what happens? This movement down, sideways, drops, sideways, drops climactically. And then we build this area here, which breaks above this area here. Not quite as ideal as what we saw over here, and yet the inability to fail, breaking this high, leading to failure, trading back down. What do you think we're looking for? We're going to zoom in on this time frame, right? Because we're starting to see what? This push, and we're starting to really slow down here. So we zoom in, and lo and behold, what do we find? We find this movement, this movement. We're now tightening up. And those of you guys that enjoy your SBS, this is basically what you're looking for. You're looking for this to be broken, this to be taken, this to be taken, and then ideally you get some sort of a move that allows you to get involved. That can be very tricky when you're expecting a higher time frame move. So what did we end up finding this morning? Right? We actually broke this, doing it again on our intermediate time frame, probably the 5 minute. It then broke here. Right? So we're looking for higher because we're squeezing into here. We run the liquidity twice. Oftentimes you'll see this move, right? But I didn't like this low. Typically, if you're low to form, you want that candle that sweeps to close strongly, right? So this failed above here. We then cascaded lower and immediately rejected. So shorting in here, right? Scalp at best, but certainly on the failure, we want to be gone, because if this starts moving, you've now got a barbecue to this high. And what we're following on this move is you're following whether or not you have a credible high come in or not, right? So first thing you're expecting when you're taking a structural high is you're expecting an SMDR to be built to do it, because now they're exchanging their positions. And in order for them to do that, they've got to create an area that does it. That's how you can tell what they're doing. And then sure enough, we get a second failure. Failure here, failure there. This was another beautiful long that ended up coming in, right? This one actually ended up failing above and then coming back in before then finally going on a rocket ship. So you got a couple of things at play here. Number one, we're building a higher time frame SMDR, which means we don't short until our objective's completed. But you also have your lower time frame one here. This is your fractal that took us above this high. We sweep this area. Notice how we wouldn't be looking for this one. Should this have traded lower, it would have traded into here. We wouldn't be looking at this fractal there because it's not responsible for anything. Okay. And onward and upward we go. You'll notice again this high. Structural candle, failed to put in a valid swing. Right? Higher time frame range / downward price action. So that's important because quite often you'll see these take an extra breath before going on a rocket ship. If we were in a higher time frame uptrend, this would be gone and you would see an infinite bid day. Not the case right now. Right? In fact, they're scaling in, which we find out in about an hour or a little bit less than that, of why they were scaling in and exchanging their positions rather than going on a rocket ship, right? So we have this high here, and we have our area of interest in here. Now, the tricky part came in when we took this high, and then we immediately came back into the zone. And we'll play this forward a little bit to kind of talk about that price action. Right after we took this high, we are actually continued up until you started seeing credible top came in, sweeping, closing bearish. This follow through, then had the exact same thing happen. And you see a bit of a different personality, right? You have, well, we actually don't even have any of those situations there. What you're looking at is when you sweep a bull bar, even internally, and you can barely even touch the open of it. That's a sign of strength. In here, you actually get the opposite. You get the sweep of this candle, which then trades below it. Now that fails in here, but then it failed to make a new high. Right? And we don't really know that. You can speculate this here based off of the movement after taking the high. But in reality, what you're looking at, to be really on board with it, the break of this low gives you your change in order flow, but that's very aggressive. And I know that there was some that grabbed this aggressive short, and that's awesome. It's much safer to wait for some sort of rejection or something like this, which you'll often see. You'll often see the break of that predominant low, trade back in, and then you're looking for failure at the order block. We didn't get that today, obviously. It just went on a rocket ship lower, right? And this speaks to the, when it's ready to pull back into the prior zone, it needs no introduction, you know. Right? So right back into this consolidation here. We then get a trigger here, trading up, and you'll notice two things. Number one, it couldn't reach this candle's open. Characteristic of what? Strong downward price action. The second thing you'll notice is we never really got a credible sell signal in here. Very tricky. Right? So your job here, after we failed, is to identify how strong this price action movement is. This failure here, trading lower to this open, should we have expected this to go up higher, we would have bounced off the open of this and not traded below the candle's low. Right? As a result, this is moving towards liquidity. And right after the attempt to rally here closed bearish, bang, down it went. Down to where? Our origin. Now this really was the trade of the day. So we spiked down here. We had this trigger here for a scalp, which I grabbed. I then scaled in on my top step accounts, expecting this second sweep to yield something here, which would have traded back up to the prior zone. But it wasn't ready yet. And we could tell because we got a valid short setup in here. Right? This candle closing on its high after the sweep, exactly what I want to see, and yielded nothing. So that trigger takes this low. And it did. Quite handily, I might add. Didn't give us the best trigger in here, but that actually failed to close below this candle. So when we're looking at this, we're looking at spiking up. We've got our area of interest here, which was responsible for significant price action. And now we're seeing this, right? Consolidation, failed to close below, valid trigger. So this is taking us up. This failed in here, which we knew here, trades back up to where the area responsible for that failure, where it really made a decision. This is the refining video, right? You're looking at this. Trades back up, fails. and down we go. Sweeping again. Thank you very much. We'll take it, right? Because now what happens? Is this high strong or low or weak? It's weak, right? 28.25, 31.75, and failure, right? Now, that's not to suggest that tomorrow we come in and we short every week high, but should you have been long in here, and I think Tom pretty much grabbed everything today, Mikey too, more than likely. What you're looking at is you're looking for confluence, and you're using these areas as targets. So if we walked in and we only saw this here, you're looking at where the movement came from. And you're looking for confluence. So you knew here this was weak and it was inside of your pocket. So should you get failure in here, you take your shot, right? And in fact, this was your conservative trade. This trade back up into this consolidation, right? Your aggressive trade could have been in here when we wicked and failed this high and then traded below that candle. Tricky, yes, absolutely. Right? You might have only looked for longs today until you had something major in here. And you'll notice the same sort of thing. So this fails. Our expectation of this high is put in a new low. Instead, it trades back down to where? The origin of the move. Right? You'll notice that it actually went below this area here. Right? Interesting, eh? So, say your OTE is here and it's trading below and you wait. You've now got your sweep underneath here that fails. Okay. This candle trades lower, trades through. There's your aggressive entry. Where's your conservative entry? It leaves this area and then it comes back in. You've got failure. So now your expectation is that this high is weak. So now we're looking to get involved. Whereabouts? Right there. Right? Now it didn't end up making it to the midpoint. But where's your confluence with this? Your confluence is this candle, which we've now deemed as an order block. So when I talk about being reactive to price, it means that we're not sitting there with an order at 44.25 or we miss the trade. It means that we're expecting this movement to trade back in, and we're expecting failure. And I think we can all agree that getting involved inside of here off of reactive price action is far better than missing a 100-point banger or more, right? And you'll see on Twitter and everywhere else people that are they're more talking about, you know, you have to have discipline. If it doesn't hit your trade to the tick, then you're not involved. And that's an old way of thinking because it applies in very certain situations, typically with liquidity, right? For example, consider wanting to take a short in here. Are you taking it here? No, you're not, because it hasn't touched to the tick for liquidity. Right? So no, you need something taken to take the trade. Similarly here, if you're looking for long after this move, you're not going long in here. Why? Because nothing's taken. Do you want to be the one whose stops are being taken? Or do you want to take everybody else's stops? Right? So what you're looking at here is underneath this candle and this here. So this pocket from 50.25 to 58. You've got it right there. Right? And it drops in, and now you're looking for some sort of reaction. You're looking for buying. And basically, that low is 45.25. So unless you're in literally right here, just jumping in, giddy, you're not going to get stopped out of this. And you won't get stopped out of that unless volatility is at a premium. Right? In reality, this push down, the majority of you guys were likely, if you're going to take this trade, you're likely getting in here on the way back up, late. Right? Or you're getting in somewhere in here. If you guys are very conservative and you decide to miss that and you're comfortable with that, then fine. You've got your second sweep that came in here, okay. And now you're looking again at the next one. So we leave the zone, we come back, and there's your midpoint. And if you're willing to miss this, that's fine. Right? If this is what you guys see and you want to take that, you're eating quite well off of 50 points here. And that's your one trade. Why is it which two candles? These two or these two with the sweeps? Or are you talking about like this green box that I did? So it's actually not the bodies. I drew the bodies out just to be kind of clear. What I'm looking at, if I'm analyzing price action here, right, it's that I have failure, which is my prerequisite, as you guys know. Short trigger above, which tells me we're trading back into this zone. So immediately my eyes gravitate towards the low of this candle and this order block. And I'm not concerned about anything else. So this low is 54.75. This open is 50.25. Right? Typically what I do is I look to see if this open is going to be respected. So my entry would have probably been below 50.25 and we would have had a few points of drawdown. Right, but let's just, for hypothetical sakes, we're looking at 50.25 and we're just going to ape in. I don't know if that's a gap candle or what it is. That looks lower to that to me. Maybe it's an optical illusion. Right, and I'm looking at a 10-point stop. And my target would be this high. Right, so clearly favorable risk reward. We get triggered in. We're immediately up 15, 20 points. We're obviously quite happy right now. But this is what I would be looking at, right? Expecting, should we trade higher, that I'm expecting these structural candles to be held. With the expectation as well that if we're going to trade in, we're likely trading in where the majority of the orders were. If you guys are looking at your OTE, you're basically looking at this. Oh my goodness. One day I'll do these correctly. You're looking at that, which gives you even less drawdown. Mikey and Bats are probably just loving it. Right? And again, it doesn't always go low to high. But what you're looking at is where the energy from the move came from. Should this low have been down here and this played out the exact same way, but this low was here, I would have drawn this the exact same way because this is where the move came from. Right? We end up getting this, okay. Right? Still involved, obviously. Now we trade up and we failed. So whether you guys take this off here and look to re-enter or not is entirely up to you. This is tricky now. The narrative's still the same. The price delivery means that we still have some unfinished business lower. Right? So we tap back into that area of interest. Very well could have swept this candle. Right? But I didn't in this case. And this is either your adding opportunity or your second entry long. Because the trade is not invalid yet. For the trade to be really invalid, we would need a body closure underneath this candle. That to me would tell me that we're going quite a bit lower probably to the open of these. Instead, we're delivering quite strongly bullish, and our expectation is that the high goes. Who could have predicted this, right? And then what happens after you break this high? You trade back into the zone, cool. Right? First tap into the SNDR. Ends up going quite a bit lower than that. Back to the midpoint probably. And then your second distribution comes. Right? The trick is having these wild swings where you're expecting this high to get taken to go lower. That's a little tricky, especially in a higher time frame move. Right? But I wasn't expecting after this second delivery and then this. I was expecting to enter a range because there would be indecision. And generally speaking, when I see indecision, more often than not, I expect range-bound type price action. Which is something for you guys to consider for future days as well. Yeah. Right? Now again, burn this into your guys' minds. When you have large swings, and you're expecting at least a few of them, and they start tightening up, you're getting to a point of rejection. That doesn't necessarily mean that it's going to take the low. That depends on your narrative and structure, right? But you're certainly expecting a pullback. This might have just traded back down into this. In fact, it did. We had a little bit of a bounce and then it continued lower. And you can tell based off of how this delivered in, right? Is this taking liquidity or is this lethargic? Right? So that's how you deliver and determine expectations of price based off of how the market's moving. That doesn't mean you're mortgaging your house and taking a short here to 10,000. But it means that we're searching for liquidity. This one is not. This one is. Right? Does anybody have any trade-specific questions or anything you guys want to go over today? Did we have fun with the games as well? It was wild how you guys were making banger trades while in the middle of a heated race. Right? And again, you'll notice the same sort of thing. Poor high, lethargic movement down leads to rejection. Where your eyes go for the rejection? SNDR. SNDR that breaks the SNDR. Taps back in. Beautiful movement. Liquidates this. That's a very poor line, but you understand what I'm saying. You actually got your double bottom here. The lead's higher. Very beautiful PA today. Very wild, but very beautiful PA today. Now I posted what it looks like when I have a red day. That was on the 1st, I believe. 2 days ago. Just for transparency, this was my day today as well. So quite a bit better, obviously, but you guys saw me sizing into some top step trades. This is just Apex, but this is what I was just feeling good. Feeling good about the read, feeling good about how things moved. Did get wrecked on one long, but them's the breaks. Them's the breaks. So for tomorrow, make sure if you guys see this or lethargic movement, you're looking to trade that change in order flow, right? We don't need to be in here. It's nice seeing Tom, Mikey, and Zin and everybody else grabbing these low a day trades. It's beautiful, right? But remember, this low's job is to take this area. Comes back in, right? You end up getting your change in order flow here. Now you're looking for that move and failure, because now your trend has shifted from bearish to bullish, and away you go, right? How much easier is it to take this long here off of failure than to fight with this?